We keep hearing Fannie Mae, Freddie Mac are too big to fail. You've heard that before. But if that's the case, who will pay to keep them solvent? And what happens if they do fail? Two views tonight from Las Vegas. Peter Schiff of Euro Pacific Capital and Toby Smith of ChangeWave Research. So, Toby, what do you think?
Well, you know, what's interesting is when people at home hear this idea, well, there's an implicit or explicit guarantee. I mean, that's confusing to begin with. There is no implicit. It is explicit. The government can't let it fail because of the $5 trillion of mortgages. You can't let the equity go below zero. The other thing is that the bonds are not just owned by American institutions. They're owned by foreign companies. They're owned throughout the world. You can't let this
So, Peter, we
fail.
can't let it fail. Literally. We've heard that expression too much, but you can't do it.
You can't.
Well, you know, letting them fail is not as bad as trying to bail them out. I mean, the losses are going to be in the hundreds of billions of dollars.
We're already there, Peter.
And
hold on, let him have his piece. Go ahead, Peter.
We have to let the people who bought these bonds lose money. We have to let the people who own shares in these companies lose money. Part of the reason, one of the main reasons that we had a housing bubble was because of Fannie and Freddie. It was Fannie and Freddie and the Federal Reserve. We've got to let the people lose money who invested in these products. The alternative is to destroy the value of the dollar, and we socialize these losses among every American who had nothing to do with it.
Are you for the socialization of these entities?
No, we're not. But again, Peter, I love you, but you always take these things to an extreme. We don't have to socialize Fannie Mae, Freddie Mac. What we do have to do is inject some capital, number one. Number two, we have to get some breathing room.
But where does the capital come from?
Well, the capital is going to come from...
That's the socialization.
But the capital can also come back. Look, if you're making the bet that the American homeowners going south, that's a bet I'm not going to take because they're not going to do that. We're in a recession. We're in a normal economic, maelstrom.
And if we give this is not normal at all, Toby.
Hold on. Let him finish. Go ahead.
If we give not only the capital, but we also, there's a whole accounting issue I won't get into. If we give a little breathing room on these accounting issues that have nothing to do in the short term with the viability of these mortgages, we are going to get through this. But because it's a hybrid, the government created this monster. It's a Frankenstein. They got to, they can't cut its head off.
Time out to both of you guys. I want to go to the referee for a second. Congressman,
thank you.
What do you think about that? Is this one of those institutions that you simply cannot allow to fail?
Well, I like your guest, Peter, actually, in position on this. Nothing against Toby.
No, that's fine. I like it too.
But I do believe, going back, I was one of the few that said that the Fed should stay away from involving itself with Bear Stearns to the extent that they did as well, that once you do that, you create a future moral hazard. We had both Bernanke and the Treasury Secretary at our hearing just yesterday, I guess it was. And when someone was asked the Treasury Secretary, what should we be doing about this, he said, I'm only looking at the here and now. Well, that's good because of the crisis that we're in right now, but some of us, Congress, has to look not only at the here and now, but the future and the long term as well. And as long as we do that, you see the problem.
And, Toby, when you think about Bear Stearns, and then coming on the heels of Bear Stearns, you have some kind of bailout of Fannie and Freddie, doesn't that increase the moral hazard risk?
There's no question it does. It's just sort of the same thing like, immigration. We let people in for 20 years, and all we decide, now we're going to ship them all back. The cow has left the barn, David. We created this, and look at the alternative. For a relatively small amount of money, capital, we can have a bridge to where we can get there as the economy gets going and joblessness gets a certain point.
It's not going to get going.
But if we kill it right now, what Peter's talking about,
we already killed ourselves.
Go ahead, Peter.
We killed ourselves when we borrowed trillions of dollars to consume money that we can never pay back, secured by real estate of phony values. Real estate prices are going to plunge. People are not going to pay this money back. The entities that loaned American consumers money are going to lose trillions because Americans can't pay it back.
Very quickly, what does happen if these institutions fail? What happens to our national mortgage system?
Look, the whole economy, this phony economy, is going to implode. We're going to have to go back to a real estate market where people go to individual lenders who hold these loans to maturity, which means we're going to have to develop internal savings because we're not going to get the Chinese and the Saudis to finance our mortgages.
All right, well, Peter, you've given us a nice segue into the next segment. For an international perspective, let's bring in our Fox Business colleague, Ashley Webster. Now, usually you see him from his home base in London, and we're happy to see him here in New York.
Good to be here.
So British Northern Rock.
Exactly.
That went into receivership. Yeah. That was a part of the whole subprime mess. This thing could spill over into
very much. You know, in Britain you have the Financial Services Authority, you have the Bank of England, you have the Alistair Darling, the Chancellor of the Exchequer, and when Northern Rock went down, they all did this. It's his fault. It's their fault. No one would take responsibility. The word that was used at the time, dithering. Gordon Brown, love him or hate him, he dithers. That's what happened. We all end up owning Northern Rock.
And by the way, there's a French company called AXA, which holds a lot of Fannie and Freddie. I mean, I don't know exactly what percent it is, but they've lost billions of dollars. So the holders of these stocks have lost a lot, too, internationally.
Yeah, absolutely. I mean, the impact of this is being felt around the world. I think from Congress, and with all due respect, I think I'd be embarrassed if I was in Congress to allow this, all the delays it took to get better regulation. I'm not a big fan of regulation, but you know what? Fannie and Freddie, they've been playing financial Russian roulette. I mean, they have been operating like a hedge fund. And as far as Bear Stearns, are you telling me that up until March 14th, the government had no idea what Bear Stearns was up to? How did that come about? I just don't understand.
Well, part of it might have been an issue of trust, Congressman. And the question of whether there was a run on the bank of Bear Stearns or whatever, frankly, any bank, any commercial bank, any financial institution, Freddie or Fannie, if they lose the trust of the people, their credit is ruined. In fact, the word credit actually is derived from the word trust. So the fact is, without trust, any credit institution could fail.
Yeah. Well, I won't say that I'm embarrassed by what Congress does. But I will
they haven't done, is what I was saying.
They haven't done. But I will say this: you're right on the definition of credit, and as far as trust goes, and the people in this country has lost trust in Congress.
So how do you rebuild trust in our financial institutions?
Well, I think from the bottom up, we can do it through some form of a regulator here. But you know, if we ever get to the point, as some are suggesting, as far as injecting funds in here, I would like to say that there's a string attached to it. Because if you just put a new regulator on and allow Congress to bail them out, well, you know what happens? That regulator is not going to be 100% fallible, and you're going to have this problem in the future. You have to do something to begin to rein in the size of Freddie and
So Fannie. I see you somewhere between Toby and Peter.
But look, we could go to the capital markets. There is an opportunity here. There's no reason why an independent entrepreneurial company couldn't come out and, you know, Warren Buffett and T. Boone Pickens and great entrepreneurs and raise some new capital and operate, and that could happen. We can solve this problem, but 80 to 1 leverage.
Not without a collapse of housing prices.
$1 of equity and $80 of borrowed money is not
sustainable. Peter, what did you say? 5 seconds. Go ahead, Peter.
Well, I said nobody's going to want to lend Americans money to buy houses until the prices collapse to the level where we can actually afford them.
And
that's
Congressman,
the problem.
final word.
Thank you for that, Peter.
I agree with the private sector. One of the areas they talked about covered bonds, allow that field to grow as well, and that's something else to provide the private sector to grow in this area.
Guys, I know a lot more about this crisis than I did before, but I still don't know how to solve it. Coming full circle, we began the show with a story of IndyBank.